balance sheet tightening we actually see the Fed conduct. So I think that that's going to be a very important issue this year. I think market pricing from an interest rate perspective is probably fairly well balanced here, but I think the bigger unknown is how quickly the Fed starts to unwind that balance sheet. Some Fed speakers are obviously talking about a fairly aggressive unwind, at least more than aggressive than what we have seen previously. And we all know that obviously QE has been boosting risk appetite, boosting the amount of liquidity in the system. So the reversal of that can clearly, I think, be at the margin, at least a positive for the dollar, but also a headwind for risky assets when we see that balance sheet tightening start to unfold.
So, Jonathan, how do you position? On the one hand, you have the prospects of war, on the other, a tightening. Would investing in China give you an edge? Can you outperform betting on China?
Well, I think that the longer-term prospects for Chinese bonds, I think, is still reasonably sound and solid. I think that there's still a good solid long-term carry trade investment there. I think that the Chinese authorities have clearly demonstrated that they're not going to go down the path of really flattening the yield curve aggressively. I think that they've looked at the lessons of what's happened in some of the major developed economies, which have got themselves into a bit of a tight corner now. So I think that we're still going to see a reasonably positively shaped yield curve. So that still can generate meaningful carry returns over the longer term. I think the Chinese currency is still going to remain broadly stable. We'll probably see a bit of weakness in terms of the currency as the Fed starts tightening, but nothing too dramatic. The equity market, I'd be still a little bit more cautious on. I think we have to get through these property headwinds, and we have to see how much stimulus is in the pipeline. So I'd be kind of sticking to the fixed income market at this stage. And I think that that's a reasonably sound, safe investment, particularly with what's happening in Europe at the moment.
Jonathan, would you say there's a higher risk of a hard landing right now? All eyes on the PCE report coming out today, or rather coming out this week, and expectations are that we'll hit yet another new high already at 40-year highs for inflation in the U.S. What's your take on that?
I think that's definitely a risk. I mean, if you look at the most recent CPI print, you look at the PPI data, you look at the ISM prices paid component, etc. All roads look to be pointing towards still very strong inflation pressures. So that may see some of the ignite around some of the debate, I should say, around 25 basis points versus 50 in March start to kick off again. Although I think the Fed is still fairly adamant at this stage, at least the core members of the Fed, that 25 is probably the most likely path at this stage in terms of kicking off the tightening cycle. So I'd be surprised if we got much beyond, say, more than 50% priced in for that 50 basis point move at least at this stage.
Jonathan, you've got to also, look at how you're going to be doing against the dollar here as well. And if you look at some of these Asian currencies, some of those which did badly last year may well do better this year. And I think you singled out the baht with regards to that. Is it a function more of dollar weakness there than baht strength? And what else are you looking at?
Well, I think there's two clear kind of positives for the baht at the moment. I think that clearly the market is starting to price in a better tourism outlook. I think that most countries are kind of generally moving towards, a living with COVID type situation. What will be critical for the baht, particularly as we progress further into this year, if they can negotiate travel bubbles with places like Malaysia and China. They have expressed the desire to do that. So that could really kind of give a stronger impetus to the tourism outlook than currently what is priced in. The other positive, I think, is the gold price. There's a lot of domestic gold held onshore in Thailand. And as that price goes up, you'll see domestic residents selling that to local gold dealers who will then put that into the export market. And that will generally boost export receipts for Thailand, which will then naturally flow into a stronger currency. So I think those are the two big factors we're watching at the moment. But and I think that we still have further to run in that play. We're probably going to start to stabilise the closer we get down to 31.50, but we're clearly not at that level yet.
It seems to be a consensus now that China is entering into sort of some credit expansion phase. How do you see this translating to markets here? Are we likely to see a rebound and a material one, or is it not as that straightforward as it seems?
I think it's probably not that straightforward. Okay, this is definitely good news that China is relaxing its credit. Definitely, it's a good thing. However, I think there are still two major concerns. Partly, actually, to say three. The first concern is, as you probably have mentioned, the tech sector regulation seems, well, we thought it's finished, but it's on and off. You have some news coming out which probably are not that positive. So, well, I personally don't think that the regulations, the new regulation will be as many as that provide video games. And then thirdly, is the biggest elephant in the room is the US market. In the last 25 years at least, there's no one single year in which S&P are going down and MSCI China are going up. So if S&P are going down this year, well, the smart money will bet than MSCI China.
Confirming earlier reports that Macron had mentioned about this Biden-Putin summit here, that both sides have agreed, and that certainly has turned favorable when it comes to sentiment, at least for now. Vincent, I'll bring you back in. Maybe you can talk us broadly about the geopolitical risks out there. You see it in commodities, especially even in China as well. Do you think that these headline risks when it comes to Ukraine, that most of it has been priced in already?
No. The reality is that we haven't had a serious warfare that really in the European land for a long time. If there's a really serious military conflict, then what will happen to the China-US relationship? Will it get worse? Which is very possible. I think this is a risk. So if nothing happens in Ukraine, good, it helps. But if something bad really happened there, I think it's way too early to say that the price test is come yet.
Okay, well, if nothing happens,
say, then the U.S. market will drop. If U.S. market drop, you may argue that the China market may drop less. I don't dispute, may drop less, but it's very difficult for the China markets not drop in that scenario.
Right. Okay. Then I imagine, the long-term China bulls would then go and say, oh, it's a buying opportunity in China. Coming out of this, for example, Vincent, and you've covered China for a very long time.
Yeah.
What allocations would you then recommend for everyone who's looking to build their China exposure, say on platforms in big tech? Would you recommend the same exposure there? Or has that been now replaced by something else? And what would that be?
I think at this juncture, when you look at China, the really sectors that have a genuine long-term growth potential: internet, healthcare, new energy vehicle, possibly. Semiconductor is kind of like a import substitution pay. These sectors have a kind of a good long-term trend growth stories. Long-term trend, I mean 5 years. Okay. When we talk about these sectors, these are very broad terms. Within these sectors, some of them dropped a lot last year. Some of them haven't really dropped much. So valuation will also be a very important consideration.
Thailand President Pakorn Pithatawachai. Kun Pakorn, good to have you with us. First off, are the inflows sustainable going forward in 2022?
When you look at the inflow into Thailand, you will notice that during the past few years, it has been mostly outflow. But now, once the COVID situation has been better controlled, you see that the foreign flows start to come back, especially during the end of starting the end of last year. And now in January, also roughly $500 million has coming back. Also, not just the tourist industry that has been recovered from the COVID control, also the export sector in Thailand, which accounting to roughly half of our business here, has been booming, and that would attract more foreign investors in the long run.
Can you put a figure to that fund flows expected for the year?
During the past few years, we saw a lot of fund flow out from Thailand. It's roughly about during the past 2 years, roughly $6 to $7 billion. And this year, what we expect to see is that if the situation has been as we expected, we certainly would like to see those kind of approximately amount coming back to Thailand.
And Kun Pakorn, it's Ivana Hong Kong. Thanks so much for joining us. On top of all the good news, it seems like the Thai stock bourse is also with the others around the globe.
give an approval very soon, and we hope that we can start the operation in the second or third quarter this year. For our digital asset exchange, we would concentrate on the investment token and the utility token. Those are the things that has been in high demand in both local and international market. On the investor side, they would like to invest in some of these digital assets, and also on the fundraiser, they would like to use these either investment token or utility token as a mean to raise fund. That's why we look into this market.
But you're not going to be looking at cryptocurrencies. And walk us through the reasoning why. And do you think that's going to dent any of the allure of a digital asset platform like this or exchange like this?
For us, our strength has been always on the investment tools or investment nowadays. They don't allow to use the cryptocurrency to be the mean of payment in Thailand already.
It's interesting too, maybe get your outlook when it comes to the IPO pipeline. I think it was last year you said before that you're aiming for 30 to 50 IPOs for the Thai set each year. Are you on track for making some of these?
We have Thai GDP today coming in better than expected. How do you view the outlook for the economy for the year?
For Thailand, our economy has been recovered in a K-shaped way. So you notice that for the industry has been doing a lot of export, has been recovered very well. Nowadays, what we are waiting are the domestic economy, the tourism economy, the well-being economy. Those are the area that we think will recover, but it depends on how we can control the COVID situation, which at the moment it has been better. So I think the GDP number should reflect our prospect of the recovery.
How do you decipher what's going on both sides at the moment?
Well, certainly, as we've seen the tensions escalate over the past weeks and months, really, we are reaching this sort of fever pitch stage, and really we are at a pinnacle of the crisis. We've heard, obviously, from the US President Biden that the intelligence community has now basically come to a conclusion that Vladimir Putin